The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you're having a good morning there in the States. S&P's sitting on the highs here. Talked about staying away from this on the short side. Still feel that way, consolidating, spinning around up here. Not a lot of breakdowns, red shoots, whatever you want to call it. And the aggregate net profile information is pretty good on the scanner. So, again, just par for the course. Not a lot of reasons to get short this thing. Just wanted to get that out of the way. All right, let's take a look at crude. This is something on the October contract now, 4806, unfair highs on the weekly, kind of dived down below. Talked about being in a little bit of a no man's land yesterday. We're going to hit some of the usuals really quick here, and then we're going to move on to some currencies, and then literally try to find some opportunities in the scanner. Big, by the way, earthquake, if you hadn't heard of it, in Italy today, or last night for you guys, 6.2. Right east of Rome. This is the daily. I mean, this is why I'm not really super excited about this right now. There's not a lot of ways to play defense, but 44.85 still that big number down below to look at, probably to wait to kind of pick a battle. 44.85 on crude. Could have a chance to have a little bit of a bounce down there, but right now just selling at 48.06. It looks like. And buying at 44.85. Gold, similar situation as we've been talking about, just kind of nerve-wracking around the 1347 area. Nothing new there. You got 1331, 1347, and the back the truck up number at 1295, 1296. A little bit of resistance at 1367 up top. So again, blocking out the short side, just trying to use some of those inflection points to either play defense or trade the breakouts. 10-year, similar situation. Catch the bid. Do not short the 10-year. Stops below 132. Any type of downturns in the market could rally this back up to 133. That's what we're looking at. Soybeans, November. That 1017 area, we pierced it 2 days ago. I think we hit as high as, 1020 maybe? But now we're coming back off. 1017 with a little bit of noise. That's going to be a big number on beans, as we've been talking about. 973 first stop, and then possibly 964.65 is going to be the big number down below to look at as a trade and bounce opportunity. But again, I think you've got a chance to play defense above 1017. Dollar still playing defense against the 994 general area. I like how this 94.24 has, again, kind of put that little line in the sand. Higher lows on a long term. I'm going to show you this on the dollar. If you look at it across the last, since May 1st, around that area. And I like how the most recent profile is kind of edged up a little bit. But again, I like playing defense on this and rallying back up into the 95.20 area first, and then even higher, 97.16. Only reports we have coming out today, looks like the one existing home sales at 10. So keep your eyes out for that one. If you're trading notes and bonds, that's where we're going to have to focus a little bit at that time frame. Somebody's asking where I'm at today. I'm in the Philippines right now, and I'm going to go over to Kuala Lumpur on the way back home, so I'll probably try to do a show there, but I'm going to be here for the next still week or so. See a friend over there, and may reroute the whole flight through Saudi Arabia if I can get a visa set up between now and then. So That's the answer, John from Philadelphia. All right, let's take a look at a couple of other currencies here. British pound, I love how this thing really acted. I mean, this was, again, kind of waiting for some confirmations, getting that weekly close last week back up in the long-term balanced area, coming back and retesting. And now we are reaching our first goals, really. And let me tell you why. Hitting that POC on the weekly at around 132.40 on the British pound. Reached high of 132.50 already today. Kind of backing off a little bit. Here's the daily, but again, I'm paying attention on this trade to the longer term inflection points. And first stop is the POC on the weekly. Don't really talk about POCs a lot, that mode of the profile, if you will. But this has kind of acted before as a little bit of a barrier, an inflection point to pay attention to. And again, kind of jumping 200 pips off that low that we talked about, getting some confirmations off of 130.19. You got to put some in your pocket at this stage. The yen, this, I put some, I look at this as, hey, we haven't really eclipsed these recent lows back on 6/20, that week of the June 20th. But, coming down into this area, kind of hovering above this 124.25 area on the end, it's just not wanting to get away from it. It's a little concerning to try to get long this and play defense on that inflection point. Just make sure you put your stops in. It's okay to get back in the water later. You got a confluence here of inflection points on a long-term weekly and daily, 124 down into 99.82. So that's kind of your DMZ to play defense below on the yen trade. And that's a long-term view. So remember, this is something trying to catch a good risk reward off this type of trade. But I got to sincerely tell you that it doesn't look good when it starts getting into these inflection points and not wanting to stay away from them. So not the best thing in the world. Aussie dollar. I really like playing off of this, the long side, and then again, 75.87. Kind of like how it's defending that. And on the yen, let's go back to the yen and answer one question, and then Navigator. Yeah, I mean, there's no divergence in There's not a lot of divergence in place here. I wouldn't call that a divergence. Higher lows on the Navigator relative to, no really lower lows here on the yen yet. So I'm just looking at it sheerly RJP from, we just kind of got down to these lows and we don't want to get away from them right now. And that's a little disturbing on the long side. And I'm not understanding this, and a lot of other people aren't either. So it could do a little bit of a flush here to get some people like me out of it. So we'll be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. I was looking at Solar City here. This is in the news again. It says what? Musk Tesla plans to buy for 2.6 Solar City, blah, 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 blah. So, let's see. Any pre-market. Not a lot of reaction here, but I think somebody had called in about this when we were back, let's see what, back in the 1st of April. And we talked about some targets around 36. Now, this is why it never hurts to take profits. I mean, when we come down into these inflection points, 26, 23, I can't remember if that was earnings related or not. What was that on the week of the May 22nd? Let's see here. I'm moving my charts right now, guys. No? Looks like it's just a full-blown sell-off. It's okay to pick the battles, you know, especially when you have, I mean, this thing's obviously kind of had some euphoric moments on the way down, but as you come down into these inflection points, that would have been an area right there where I would have just, you know, looked at this and said, okay, well, you know, lower lows, higher lows navigator, kind of that kind of scene going on. I might want to just start thinking that the worm is turned here, but this is a great example of being able to take some profits and also being able to put your stops in. So what do you do with Solar City now? There's no edge here at all. We're right in the middle of a fair auction between 1961 and 2623. This company's got some numbers issues, in my opinion, and you want to, again, just try to wait patiently and try to trade breakouts. It's kind of going into a low volatility state here. And, you know, you could start thinking about, because you never know which way these things are going to go. When these things kind of go into a swamp of low volatility, that's, you know, we had Steve Banger on yesterday. These are the types of little situations where you can do some volatility plays. And I mean, the simple one here is really just to buy a strangle really at 26, 27, or down into 19 or 18. that general area. Just you're kind of right in the middle there. You've got the volatility is contracted. You don't know which way this thing's going to go. It could go anyway, and might not be a bad way to play this. All right, let me see what's going on in the den here. Okay. All right, Tesla's now got a car that will go 0 to 60 in 2.5 seconds. That's, if you're not a car guy, that's relatively quick. So let's take a look at Tesla. Looked at it yesterday. Little action yesterday, rallying back up. But again, the defense area above 233. I still think this thing could go lower. They keep churning out the news, and this guy's seemingly always in the news, and the market's kind of gone higher here, and Tesla's just kind of languishing down here. I still like this stock to go lower. I love selling it at 233, that area. Let's take a look at a couple other stocks that might possibly be something to look at on the sell side. Let's take a look at Goldman Sachs. All right. So and the reason I pulled it up is because a lot of people are looking at it like, okay, it's down for the year. It's down and I got a couple of emails about it because I haven't been the rosiest on the financial sector. So Goldman Sachs is down 7 or 8% this year, somewhere in there. But, the problem right now is, you kind of have, you've had profiles kind of edge down on the long term, but 163.35, we just got to get back down below there for me to start feeling hunky-dory about shorting this thing. You got a kind of a key reversal situation that has happened. You've got a key reversal situation that has happened here. 166.90 is something that we've looked at on the unfair highs on the daily. But again, I'd like to see this thing get back down below those weekly unfair highs. I like this action yesterday, but again, you could kind of look at that as a buy point on the weekly unfair highs. So on the short side, you want to see it get back down, preferably close below 163.35. While we're talking about stocks down for the year, let's take a look at McDonald's MCD. So this is one we've really been harping on the short side. We talked about it the other day, 118.86, that unfair low on the weekly. $118.86 on the weekly, that leverage point that we talked about to be able to play defense above and try to get some legs going on the south side. And here's the daily. Don't see a lot of reasons to stop shorting this and to really take anything off. You do have a new profile that's going to probably output today. But again, I think, it's just a decent situation on the short side. We talked about it before this happened because of the action and also the relativity towards the S&Ps. Don't see this thing really being in danger yet of rallying against you. Sorry, guys, I had somebody Skyping me. We're going to turn that off. All right. So let's take a look at a couple other ones. We're going to take a look at Nike and KE. These are some stocks that are down in the Dow, just went down point-wise on the year. And again, this is kind of like a Goldman Sachs situation. Even though it's down on the year on a relative scale, it's kind of, what have you done for me lately? It's really started looking a lot better. So, do you start looking at this from the short side just because it's a relatively for the year weak stock? No, you don't. This is one where we've got to get back down below, 57.5, 58.5, and just kind of, block out the short side until something like that happens. All right, let's go and take a look at Facebook really quick. had an email about this one. So we've got a new profile this week. This is somebody watching in the scanner. We talk about this one. Just do not short this stock. It's like an Amazon situation. It's a relatively strong stock in a market that is kind of sitting on the launching pad again, the broad market. The major inflection points on Facebook, 120.29 and 126.32. So, those are the ones you want to pay attention to as far as areas to pick battles to trade this thing. So we're looking, that would in essence be support at 120.29 and breakouts above 126.32, not shorting against 126.32. Guys, we'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. Apple, taking a look at this one. A couple of bellwethers, Facebook, Apple. Here we go. Looks like pre-market we're printing 109.91. That looks like a real print there. Maybe. So, up a couple of pennies here, but, people always, I get an email or two about this one seemingly daily. Is it time to short this? Because I was really bearish down here, 98.64, made some points on it, tried to short it again. I mean, this was before the earnings thing, and then we have a moonshot here. So if you step back from it just a second and, continues to make lower highs here if you want to look at it that way. But, I'm looking at it relative to profiles on the weekly. I'm looking at it relative to profiles on the daily. We talked about actually a profile appearing below price action being bullish on this on the daily. That's still the case. And, you got better shorts out there. And, forced me to make a trade. It's not a bad looking long. So, don't get stubborn with trades. It is what it is. If you've been trying to look at it from the short side, let somebody else figure out the high print there. And, Apple doesn't look terribly bad no matter what. Let's take a look at another stock that's been getting kicked around here since the first of the year relative to everything else. Disney. Now, this is one, forced me to make a trade. There's something wrong here. I love how it's acting. I love how it's staying below 196.89 to be exact. I like how it's kind of like consolidating down here, as the market's kind of doing the opposite measure. Any type of market pullback should drag this thing right into the toilet. So Disney, quite a bit of news out there all the time on it. I like how it's consolidating here. I like how the relative weakness relative to the market is in force. Now, remember, the market could go a little bit higher here in general. So, rising tides lifts all boats. Just be aware of that. But, again, Disney, if you're going to have shorts in your portfolio, that's not a bad scene right there. Just checking it in. I got a limited amount of real estate here as far as screens go. Let's take a look at Boeing. This is another one, not the rosiest stock this year relative to the first of the year. But, again, I'm looking at it relative to profiles, looking at our weekly, looking at our daily. Here's the daily. You got better longs out there, I'll admit that, but, your short opportunities probably are playing defense above 135.67 and targets down below around 130. You got kind of a big support area around 130, but, I think you've got better longs out there and better shorts. So Boeing was one on my list today just to kind of briefly give a dissertation on. Let's take a look at ExxonMobil. Wow. This hadn't really cooperated with crude lately, huh? So here's the weekly chart on ExxonMobil. Here's the daily. Kind of a no trade right now. Forced me to trade it. I'd say it's going to head lower. I think you can play some defense above 88.80 on this. And hopefully it could revisit 86.38. But again, taking a look at crude. Crude's kind of non-directional right now. You don't have a lot of edge there. So let's take a look at the scanner really quick. Just going to notice, just first and foremost, breadth calculations are pretty daggone positive on the long term and the intermediate, the weekly and the daily. Here's our short term that you can pretty much trade futures right by, in my opinion, during the day. Let's take a look at the indices profile heat grid. Take a look at some global instruments on the daily. Let's just switch over to that mode. Kind of a mixed bag, but the weighting's definitely towards the north side here globally right now. And I think, like Steve and I talked about yesterday, probably 2,220 somewhere up there is where this thing ultimately may have a inflection point, target, fundamental change of events, interest rates, talking September combined. There's quite a few things going on, but we could edge higher here before we could have some trading opportunities on the short side. So let's take a look at the scanner, some underlying instruments here. We looked at some downtrend resistance stocks the other day. H&R Block seems to always be. Let's just take a look at this one. Yeah. I don't like it how it's crowding that area, but any market pullback should bring that thing down. See, Disney's on that list. We just talked about Disney. Let's take a look at this one. MAC. Well, this is one you probably want to let it retrace a little bit higher if it even can. Back up into 84.74. Bristol Myers Squibb. Ooh. There you go. And there you go. So a good profile appearing above price action here. This may not be over for BMY. The big retracement area on BMY is going to be 61.45. I might want to wait and see if that happens. I mean, this thing's just gotten hit pretty hard. Let's go into breakdowns here. NOC, Northrop Grumman. Let's just take a look at this one. So here's our daily on NOC. Here's that daily breakdown. Here's a weekly, just, nothing terrible there, but your targets down below are going to be around 206.52 on this breakdown. You can play defense above 216.29 on the short side. Campbell's Soup. I was shocked. Like, I was younger. I'm not shocked now because I know it makes sense. But a friend of mine his grandfather had an egg-laying kind of scene, big chicken houses and the eggs rolling down the conveyor belts and all that. And, Campbell's Soup would just come by and take all the older birds. For some reason, that shocked me back then. So whenever I eat a can of Campbell's chicken soup, I think of older laying hens. Here we go. Uptrend reversals. We're going to take a look at a few when we come back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. That's funny, JB. All right. So, you know what else is funny is I'm looking at uptrend reversals. JM Smucker Company. Pretty big leg down here on the daily breakdown, uptrend reversals for sure. And that could be because I'm not in the States anymore, just wolfing down PBJs with gallons of milk every night. Man, that is a problem I have. I don't know if you guys eat peanut butter and jellies, but I'm just, man. So when I'm out of the country, this basically can happen to Smuckers. All right, let's take a look at a couple others here. NEE, Nextera Energy. You know, kind of a defined uptrend, kind of a reversal here happening. First, kind of hints of a breakdown on the daily. Nothing. That's not a grand one right there. Pinnacle West. Let's take a look at this one. Same setup. Let's get out of the scanner for a second. Somebody's saying gold getting slammed. Yeah, it is coming off. That's why you got to put stops in when you walk away from the terminal looking at gold. Don't know what that's about, actually. Let's hit another one. Talking about commodities, I want to hit natural gas really quick. This is really why I wait to use the longer-term profiles, especially on something like natural gas. You know, we kind of base down here, 2.559. This is the September contract on natural gas. So, you know, target's 2.846 on this. But this is why I like to use these profiles to kind of make some sense out of things. If you'll notice, you know, these inflection points are pretty daggone good at picking battles around, trading breakouts, buying support, you know, the whole 9 yards. So natural gas, you got a little bit left, 2.846 on that trade. That's where you got to be looking to probably take some off. Excuse me. Silver. So, you know, gold's coming off a little bit. Silver is too. This is the big number here on silver. 18.558. 18.558. So let's just call it 1856, round it off. So we're not there yet, but we're getting daggone close. So same principle as natural gas, good places to pick battles when you got these long-term inflection points being approached. I just showed that in the den, or in the visuals for, is it Robert in Buffalo? Was that Robert, the blind gentleman up there? 18.558 on silver. XLE, some numbers here. It looks like we're printing 69.59 this morning. So 69.03 is kind of support on the XLE. It's kind of nice how this thing is really held up above these weekly unfair highs after oil's kind of backed off again. There's some decent XLE stock plays out there still. I'm going to go back into that sector in the scanner. Here's the energy stocks. Here's some of the ones that are hanging in there. It's not too many on here, so we're just going to kind of do a cursory view. Let's take a look at PXD. Good God. Ooh, that's a move. Yeah, that's a little crazy for me. I think we got to look at something a little more calm. Marathon Oil, and again, here's the weekly. We had these are just such cool situations when these happen. You have the breakout, you go back and retest. There's that 1547 unfair high. And this is also that price action appearing below 1543, or excuse me, price action appearing above profiles. So you had some really cool things in your favor here to catch a bounce on MRO. The breakout, the come back and retest the weekly unfair highs. And you also had a profile appearing below price action yesterday after that pullback, which was insanely super bullish on this stock. So you've got all these setups you can review in the scanner, and you can try to pick them out ahead of time. So, just the way you'd pick this out ahead of time, by the way, is you go over here and you look for uptrend support. And that would have appeared real time MRO on the scanner. So you've got some things here that closed in that scene in the XLE. These are XLE stocks doing this particular sort. So Devon Energy Corp, man, that's insane. That's not really. There's the Pioneer. That's uptrend support. I guess you could call them that support. But let's look at our dashboard in general. And let me just get some more candidates for you. Uptrend support. Quite a few here. And obviously those XLE stocks are in here. So a couple other ones. Let's just take a look at Lockheed Martin. Let me see here. All right. So here's one again, kind of coming down into, in a big uptrend, coming down into kind of Custer's last stance here. 249.06, bottom of the profile on the weekly. Got a trading opportunity here. So it's letting you know uptrend coming down into maximum support on this one. Lockheed Martin. God, I hadn't traded that in years. Let's look for another one in that kind of same scene here. Let's just take a look at ConAgra Foods, and I'm looking at these color setups and numbers, and I'll kind of tell you why. Yep, these are kind of sitting on weekly support. They've had a good run for 26 weeks on here, defined uptrend, and just kind of hanging around support areas on the bottom of the profile there. Somebody's asked me to look at CLR. Is that the calcium lime rust? No? I'm just kidding, Terry. Anyway, that stuff's amazing if you've ever used it on some. Yeah. Anyway, 46.33. That's the weekly unfair. Obviously, we kind of busted out the past 2 weeks and came back and retested this week and really defended that area quite well. It looks like pre-market, we got a couple of prints, 48.93. So the question is what do you, is this something to buy? Yeah, I mean, I'd rather buy it than sell it. It's definitely something I would block out of my short list. Yeah, this is, you got a couple of things in your favor on the long side here. It's outperforming the market, it's busted above profiles, and it's defended the recent breakout. So, again, block out the short side. We'll be right back, guys.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show, and just let everybody know I've got on the screen here in the den Larry Pesavento doing probably another insane webinar tonight. I'm going to attend this myself. So 5 to 6 today. Make sure you catch it. Just putting it up there so you can see what's being covered. You can take a look at it on the TFNN website. I will be there. All right. Taking a look at the euro. Let me get back to my currency. See if we can get this to get away from the end here. The futures, the currency futures, and the spot currency. Insane in a good way. I meant to say that about Larry's webinar. 112.48.49. You know, the euro, I'm got my hedge on, and this is going to be a good ways before that can unravel in a good way now, because we've just spiked up so hard. But I put this on for a very long-term reason. You're coming down in support on the euro on the intermediate, so for people who are playing around with this on a little bit shorter-term time frame, you got some support here. You're kind of bouncing off of it, as you can see. 112.48.49 on the euro. But, going into the longer-term view, yeah, still within the long-term balanced area. Again, I'd love to see this thing revisit 109, that general neighborhood, but that is a little ways away now. Might have a little bit of a trade and bounce here at 112.48.49 though. All right, a currency I really kind of bypassed a while ago. I wanted to hit Canadian dollar. Kind of, you know, looking like it wants to kind of get back into that 130 area. So, you know, kind of keep that in mind as a bearer of bad news for crude. Again, you know, this thing rises, that means a devaluation. And Larry himself has pointed out that there's just a sick correlation when it comes to the Canadian dollar and crude. So, you know, Canadian dollar looking like it's wanting to get a little bit more devalued, and take that for what it's worth on a little bit of a forecaster of crude in the short term. I want to hit a couple more stocks over here I didn't quite finish with. Amazon. So day before yesterday, we had that kind of key reversal off of that area, kind of faked some people out. 757.34. That's your support on it. As crazy as this thing is in the stratosphere up here, it can go higher. Remember, the market could be poised to move a little bit higher itself, and it could just, you know, some of these stocks that have been strong, we've got a new breakout on this above 773.75. Another stock that, you know, we don't talk about POCs too much, but I've been kind of looking at this. This is General Electric. You know, nothing. This is the daily chart. It's just been kind of stuck in this compressed range. And what does that mean? Well, we had a little bit of a key reversal outside the range yesterday, but this usually is a forebearer of some volatility pickup. And I like how we've kind of gotten a wide profile here. We defended against this POC in the wide profile. We don't talk about POCs that much. 3109. I think we can be in order to hit 32.62 on this. I like it from the long side. Stay tuned for Larry, guys. We'll pick it up again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.